Over the weekend, everything completely changed. The fecal material hit the oscillating device. What happened? What's going to happen? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hello everybody, welcome to my channel, and hit that like button if what I'm saying is of any use to you during this presentation. We got one of the most stunning stock turnarounds in history, I believe, over this weekend. It's one of these massive turnarounds that the Fed and the Treasury and the executive branch takes and says, you know what, we're not going to let any banks fail. Banks were starting to fail and could still fail. But the government has assured us now that they will not let any banks fail. In fact, no depositor is going to lose any money in a bank because the federal government is going to pay for it. Okay? Up until Saturday morning, Janet Yellen was saying, "Oh no, we're not going to bail out banks. They're going to have to take care of themselves." And the Fed was more or less saying the same thing. There's a thing called moral hazard, that if you bail out everybody every time things go down, they never learn not to do risky things. And so they call that a moral hazard. Well, I think the moral hazard is there because I think what happened is the executive branch, the president of the United States, decided, you know what, we can't let banks fail and we can't let people lose their money in these banks. The first bank was Silicon Valley Bank. This is a huge bank, the heart of technology near San Francisco, Silicon Valley. $175 billion of deposits, $212 billion of assets. They couldn't let this thing go down. It was going to set these venture capitalists back 10 years because that's mainly who used this bank, people that were starting technology companies. It basically was lending money to innovation. And so this would have set things way back. But that was one sign. But then Silvergate Bank, which is a crypto lender, it lends money to crypto projects, and there's a million of them. And there's all kinds of money in that. And that has added a new degree of variability that is hard to control. And another bank in New York, Signature Bank, went broke also. So we have three banks going down the tubes. You know what they say, when you see one cockroach, there's probably a lot more. And so to spare the country a lot of pain and to save the banking system, essentially, it's mainly the regional banks, because the regional banks aren't as capitalized as the big banks like JP Morgan. JP Morgan would be the last to go. And part of it is because the Fed has been so strict with them and requiring them to keep plenty of reserves in case something like this happened. But the regional banks, they let go a little bit more. And so the federal government has more or less said, depositors, don't worry. We don't want bank runs. We're going to make every depositor whole, so we don't need to worry. And this changes everything in a massive way. But we got to ask ourselves, is this good news or is this bad news? Okay, now it's good for the depositors to these banks that the government has decided we're not going to allow bank runs. Okay, that is good. There's no doubt on the one hand. On the other hand, how serious is this that three banks have already failed? And it's kind of an international phenomenon. Credit Suisse is having problems too. And they look like they might fold. They're going down a lot, and so this is a sign. I think when this first came out, I'm doing this Sunday night. Early Sunday evening, the markets shot up a couple hundred points. But as it's getting towards early morning, let's say 8 o'clock last night, Arizona time, the markets were shooting up, okay? 3 o'clock this morning, they've kind of settled down because I think the thought is, this isn't necessarily all that great a news, folks. It isn't a good thing that we're hearing that banks are failing, even if the government is backing them up. This reminds me now of 2008, and we don't want any similarities to 2008, which was the Great Recession. So I think a really bad sign is the VIX has gone up to 27. Okay, that's the highest it's been in like a month or two. Okay, I think about 2 months, and so I initially thought, well, I better stop shorting. You know, the VIX goes to 27. Yeah, I'm thinking shorting, and it's easiest to short when it's coming down from a high. So that's kind of my mindset right now. But let's see where the day goes. I think the most important news I have for you today, and this is about an hour into trading on Monday, is that the VIX is at 30, hanging around 30. And that's, it was down at 20 like a week ago. So that's a major increase. That's a measure of fear and volatility, which is usually worse when people are shorting the market, or they're selling their stocks, or they're putting puts on their stocks to protect them. So I will be shorting using triple leverage inverse funds, which I will describe later. I'm filming this at various points during the day on Monday, and we're about an hour into trading, and the markets all came down to begin with quite strongly, but then they rebounded back to neutral, I will call it. So the market's trying to make up its mind, and this is after the president spoke, and I'm glad he clarified that the banks themselves are not being bailed out. Only the depositors are being protected, and they're going to receive all the money they have deposited in these banks that are failing. And he wanted to emphasize that no taxpayer money was going to be used to cover these depositors. What they're going to do is they're going to charge the banks an extra fee for the insurance that they provide to their depositors, and that way the banks themselves are paying to cover the depositors' deposits. So it sounds good, but I think what we've been seeing is, first they broke down crypto, and then they've broken down the stock market in many ways over the past year, and now the banks are starting to break. When things start to break is when the Fed usually is forced to pause. Now, will this be serious enough to force them to pause? I think it's going to be 0.25 at most. And Goldman Sachs is saying that they should not raise it at all. They should just leave it the way it is, which is what I believe too. When things start breaking is when they need to stop. And actually, the Cleveland Fed nowcast predict that the year-on-year CPI tomorrow will be about 6.2%. It was 6.4% the month before, so that's just a teensy improvement. So I don't think that's going to be favorable. And month on month, it will have increased 0.5%, a half a percent. So I don't think those are favorable numbers. It's a slight improvement, maybe, but when you look at the core inflation and all that, I don't think it's going to be seen as all that favorable. The prediction is that inflation doesn't start to really decrease until the next report, which comes in April. So I think it's possible if we get through this rough patch that April may be the point where things start turning up if the banks breaking is not systemic. If the banks going afoul here, if that can be stemmed by the government protecting the depositors, well, then that's going to work. But we have to see whether this is a systemic problem. They say it's not a systemic problem. But I think in any case, with the inflation numbers not being too good or being a teensy-weensy bit better on Tuesday, tomorrow, the 14th, I think we end up shorting the market for now. I do it on a daily basis. I might leave these on overnight. I'm doing SQQQ, which is the triple leverage inverse fund on the 100 largest companies on the NASDAQ. And I'm doing SORTY, which is SRTY, which is the Russell 2000. And it's a triple leverage inverse fund also. So, interestingly enough, I thought SORTY would do better, but so far SQQQ looks like it might actually do better today. But again, these are very short-term, risky investments, and I follow them very closely, and that's what I'm going to be doing for the rest of the day. So you will hear my next report probably around Wednesday, hopefully. I will film it on Wednesday and tell you what has transpired with the CPI and the market and my trading. For now, I'm bearish. I'm holding out the hope that I could go bullish come April, because that's when I think things could turn around for the positive. That's all I have. Thanks for listening and watching. Be sure to smash that like button. Subscribe if you haven't already done that. Good luck to us all. Hit the little notification bell if you haven't done that and you want to be notified. And thank you very much.